General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. Yeah. Let's knock out this work. News for tomorrow. I think tomorrow is PPI. Let's see. Let's do it this way. PPI comes in tomorrow. Fed watch. See if CPI affected rate cut probabilities. Not really. May 7th rate cuts have been off the menu since the tariff pause. Let's go to see what June. How did CPI affect June? Okay, it actually went up for June. Rate cut possibilities went up for June. Let's see earnings. Just go here. Banks report tomorrow. Banks report tomorrow. Uh, this is the kickoff for earnings season. Let's go here. Dollar on a daily. Okay. Target hit on the dollar. CPI gave us direction. CPI gave us direction. $99 is possible. Look at Euro right quick. Crazy, right? This target missed on Euro. Target missed. Price just retraced today. Let's go to the weekly. It's only one more day left in the week. I don't know what this is for. Long doji at the top and the bottom. Long doji at the top and the bottom. Kind of an indecision week. I think all weekly targets have been met. See if we have clear order flow on the daily. Okay, completely balanced. We don't need this. Here, delete that. This old low. Oh, that was an old monthly low. Hold up, hold up, hold up. Lower prices kind of make sense. This could have been that big one big candle retracement. Not expecting too much. On Friday, but macro order flow is bearish. Until we respect the bullish array. here is like we have CSD here. We closed, respected this wick, pushing down. Let me see what this sale looking like. Here we go. Cool little stop. Let's see. Let's see this. Cool. Hold on 1 second. Okay, cool. Let's make sure I got this chart link. It's a slow drop. No bearish FEGs. Overall, it still looks bearish. Let's go to H1. Any key levels here? Previous day low makes sense. The bottom of this candle, really the open price of this candle. I'm gonna take this off. Yeah, delete that. And delete this. I believe there's a line right here. Delete this. Cool. 17,532.50. $17,532.50 is my target for Friday. All right, that's that on that. Let's add this. Really don't have no alert set for Friday because it's Friday, and Tuesday, Wednesday, Thursdays is bread and butter for one shot, one kill. After you catch the mood of the week, you can pretty much chill. All right, y'all. Y'all have a good day. Peace.